Well, another day, another round of selling in the Chinese stocks and particularly Alibaba. Full disclosure, I am a shareholder in Alibaba, probably more than I wish I did have in Alibaba, but I think eventually the tide is going to turn for Alibaba, and I'm going to be happy that I own some shares. And I'm actually well diversified in Alibaba. In my IB account, I have some Hong Kong shares. In my trade station, I have some regular shares, or the ADRs. And in my M1 account, I'm assuming I have the ADRs as well. But I think this article kind of sums it up perfectly. Alibaba's stock is in the perfect storm. And today there was another round of rumors out there that China is possibly going to delist some of these companies. And it always seems to hit Alibaba the hardest. Most of those other Chinese companies are kind of holding their own. I mean, JD.com is actually holding up very well. Baidu, Tencent, I mean, they're kind of holding their own. They're down a little bit more than JD, but, they're not down nearly as much as Alibaba. I have a very small position in Baidu in my M1 account. I kind of wish that it was the other way around because Alibaba is just getting smoked, but the valuation is just getting, incredibly attractive, if it didn't have all these problems going on with Alibaba. And this article kind of sums it up perfectly. It says, downtrends, like uptrends, don't last forever, but it just seems like Alibaba sort of is. And it says, the market is no longer rational about Alibaba's e-commerce value. And I completely agree with that. I think Alibaba's forward PE is under 15 now, and for a company that's growing as fast as Alibaba, that just seems like the deal of the century. But, we do have the variant concern and, of course, the delisting concerns. So, obviously, if we didn't have those concerns, Alibaba wouldn't be as cheap as it is. But I think once those things get alleviated, Alibaba is probably going to go on a pretty big run rather quickly. This guy says that Alibaba's ADRs are unlikely to get delisted, and I also agree with that. I think it would be, I wouldn't say economic suicide, but pretty darn close if China did do that. I mean, it would basically scare away foreign investors for the foreseeable future. And, this is a global economy now. You can't just be shutting yourself off from the rest of the world. But, the Chinese government has already demonstrated that they are willing to shoot their economy in the foot in order to, regain control or gain control or just prove how much authority they have. So it wouldn't surprise me if it did happen. If it does happen, I wish I wasn't a big shareholder in Alibaba. I would kind of like to sit back and, from a neutral point and just kind of observe everything that's going on. But that's going to be very hard for me to do as long as I'm a shareholder. But it says that Alibaba's shares touch new lows this week. And he says in this article, it's not easy to defend an investment in Alibaba right now. The Chinese internet retailer got caught up in the CCP's rapidly accelerating campaign to crack down on monopolies this year. Alibaba received a $2.8 billion antitrust fine from the anti-monopoly agency earlier this year, which represented 4% of Alibaba's revenue. So kind of a slap on the wrist, even though that was a massive fine. And the regulator continues to breathe down Alibaba's neck. The state agency tasked with overseeing monopolies imposed a new round of fines on tech companies totaling $3.4 million this month. So this is still another weight around the neck of these tech companies, not just Alibaba, but all of them that they are hitting with these fines. Let me scroll down a little bit further here. They show you a price chart on Alibaba straight down from the upper left to the lower right, but we're all aware of that if we're familiar with Alibaba. But, he makes some great points in this article about Alibaba's e-commerce growth remains deeply undervalued. It says, Blending all the distractions out, Alibaba represents deep value from a strategic e-commerce perspective. Alibaba is the largest e-commerce company in China and counts more than 1.2 billion people as its customers. Alibaba owns the largest e-commerce ecosystem in the world and is rapidly expanding into adjacent markets in Southeast Asia. Alibaba added 64 million new customer accounts in Q2, showing 5% growth quarter over quarter, and it added 42 million new accounts to its platform in Q1, meaning the e-commerce conglomerate signed on more than 100 million new customers in just 6 months. So this company is still growing very rapidly. And he says there is definitely not a slowdown in Alibaba's customer acquisition. And if we scroll down just a little bit farther, it says there is also no slowdown in Alibaba's e-commerce growth either. Alibaba's e-commerce business soared 31% year over year in the second quarter to 117 Chinese yuan, while total revenue growth, including cloud computing and digital media and entertainment, surged 29% year over year to 200 billion Chinese yuan. Alibaba's e-commerce growth rate even showed an acceleration year over year, since the firm's e-commerce growth in the year earlier period was just 29%. Additionally, Alibaba's e-commerce is dependent on the Chinese market for growth. Excluding logistic revenues, 77% of sales came from China's domestic market in Q2, making Alibaba much less reliant on internet growth for business expansion than feared. E-commerce is still Alibaba's bread and butter, although this is set to change in the future as investments in cloud computing and digital media improve Alibaba's diversification and add new revenue sources. So as we can see, the outlook for Alibaba is still very, very strong. So if the concerns over the delisting ever go away, and also if the variant concerns disappear, which I think a lot of this is going to be resolved next year. So and if that does happen, I think Alibaba is going to go on one heck of a run in a very short period of time. That is just my opinion. But let's get into the charts, and I'll show you exactly how stretched to the downside Alibaba's current price is. All right, well, let's get into the charts, and I'm going to start off with this weekly chart of Alibaba. But before I get into that, please remember, I am not a financial advisor. All of this is just my opinion and for entertainment purposes only. Please make all of your own trading and investment decisions. But getting into this weekly chart on Alibaba, you can see how far extended this thing is to the downside. And at $121, it hasn't been that low since middle of 2017. So you can see how much value has come off of Alibaba's market cap just this year alone. This thing is in a relentless downtrend. But the point that I wanted to make is when Alibaba gets this extended, especially on the weekly chart, it almost always has a snapback. So let's zoom in a little bit closer and I'll show you a little bit of what I am talking about. If we look at this 8-period exponential moving average, this white line on the chart, and bring this line down, if you look at that little box on the left there, it says that Alibaba right now is extended about 18% away from the 8-period exponential moving average. If we look right here, it was about 11% away. I mean, if you go to the bottom of the next candle, you could say it was almost 15% away before it had that huge snapback move up. If we look at this huge red candle that it had back at the end of 2020, we can see that it was down about 17%, so about the same as it is right now as far as being extended away from that 8-period exponential moving average. If we go all the way back to early 2020 towards the COVID collapse, it got as far as 15.5% away from the 8-period exponential moving average before it had this nice snapback move up. Just by looking at the chart, I can see that none of the other moves were even close to as far as it is right now. So I would expect, a pretty decent size snapback in the rather near future. I mean, who knows how much more bad news is going to come out. But if this thing prints another huge red candle to the downside, I'm probably going to be all over some medium-term call options and try to capitalize on this, short to medium-term move that we're going to have in this eventual snapback, a potential eventual snapback in Alibaba stock. I do plan on holding on to all of my shares, but I just want to apply this kind of leverage to this short-term move, because you don't see stocks that are extended this far away very often. There's so much negative news pouring on Alibaba, it's easy to see why it is, but eventually you always seem to get a nice snapback after you get this far extended away from that moving average. But let's jump over to the daily chart real quick, zoom out a little bit. You can see it's been in a relentless downtrend ever since about October of last year, and this thing now is currently off 63% from the high that it made last year. So, I mean, just a huge, huge pullback in Alibaba. And if we zoom in a little bit closer, you can see we had this breakaway gap a couple of weeks ago, and it's just continuing to go down in a very aggressive fashion. Hasn't even come back to touch the 8-period exponential moving average on the daily chart yet. And normally when a stock gets on a downtrend like this, you can expect it to come up and touch it a few times as it's moving down. But the selling has been, so aggressive that it hasn't even come up for air yet. So Alibaba, in my opinion, is so extended to the downside. This thing is just poised and ripe for a sharp bounce. Hopefully I can capitalize on that move as well. But looking at some of the other Chinese names, I mean, let's take a look at JD. You can see JD.com, I mean, is just in a beautiful rounded bottom formation. This thing is more than holding its own. I mean, it's only down just a little bit for the year. And when you consider what's going on with these Chinese stocks, that's almost up, like being up 50%. But another one that I own is Baidu. I own a very, very tiny position in Baidu in my M1 account. And you can see Baidu is holding its own. I would expect Baidu to be down more than Alibaba, but for whatever reason, Alibaba is getting hit harder. Another one that I own a small position in is Bizun. They are a Chinese e-commerce retailer, a very interesting company. Before all of this started happening with the Chinese stocks, I thought it was a great bargain in the low 20s, but you can see it has fallen all the way down to $14 a share. I've added a little bit in the last couple of days or so, but it's not a very big position. I'm not very worried about this one. My Alibaba position is much bigger. Another one, of course, is Tencent, TC. I always forget the ticker on that one, TCHY. You can see Tencent is more than holding its own. It's basically been going sideways since July. It has pulled back substantially from its high right around $100. I mean, right now it's sitting at about 41% off the high, but I mean, honestly, over the last 4 or 5 months, this thing has been basically just going sideways. It's under accumulation. It hasn't been rolling over anymore. So as far as the Chinese stocks go, for whatever reason, they are kicking the poop out of Alibaba, but some of the other ones are holding their own. All right, so let's get into my trading results for the day. And by the way, if you are not subscribed to the channel, I like to give out trading ideas that I see every day in the market. I don't necessarily take all of them, but if that's something that interests you, please consider subscribing so you don't miss any of the trading day ideas that I see on a day-to-day basis. And also, I do have a Patreon group. It is only $10 a month. The link is down there in the description. So if you'd like to join our small trading group and see what we are trading, that link is down there. And if you don't mind liking the smash button, that helps out the channel, I guess, in a very big way, and I would appreciate it. But one trade that I made today was I bought some call options on the QQQ, and as we can see, the QQQ is extended to the downside, and we had a nice little reversal candle. So I'm hoping that we're going to get some follow through to the upside tomorrow. But let me go to the 5-minute chart, and I'll show you what I was seeing and why I made that decision. Let me back it out a little bit here. As we can see, when the Qs were falling, it made a nice little positive divergence on the MACD indicator. If you're not familiar with what a positive divergence is, it's when price makes a lower low like it did right here, but the indicator makes a higher low. These are very good reversal indicator patterns. The MACD is not the only one that does it, but if you just do a Google search on indicator positive and negative divergences, you get a more of an idea what I'm talking about if you're unfamiliar. But these things are great reversal signals. But anyway, once price jumped above the 8-period exponential moving average and held, that's when I bought some $392 call options. I was up probably about 20% at one point, and I actually considered only using this as a day trade, but as it got closer to this resistance area, I was thinking that maybe I should hold them overnight, because since we're having this reversal in the market, if we get some follow through tomorrow, these things could pay off very big. So when price pulled back a little bit, I kind of doubled down on them. I usually don't like to double down on options, but the market doesn't get as stretched as it is right now very often. So I wanted to take a shot on it. It is a low probability, high risk trade, but if it does pay off, it should pay off well. So Cross your fingers for me for tomorrow. Hopefully we get some follow through in the overall market. Now, and the Qs have actually been a lot stronger than the other indices. If we look at the Spider or the S&P 500, you can see the S&P 500 was stretched even farther away and has had a little bit more of a reversal today. So I would expect some follow through tomorrow. You know, you never know what's going to happen the next day. But if we look at the diamonds or the Dow has been falling off a cliff. So this one is way extended to the downside, and its snapback is going to be inevitable in the Dow. Hopefully it happens tomorrow, because I only have 1 day left on those call options. And, you know, if we do get a move up, say, to right around the 50-period simple moving average on the Dow, that should drag up the Qs quite a bit, and those options are going to pay off very nicely. So hopefully that happens. But I did make a day trade in another stock called DWAC, and this trade did not work out. So DWAC de-whacked me on this one. It looked like it was going to work out, but unfortunately it didn't. But let's go to the 5-minute chart. I'll show you the setup that I had going on. If you're not familiar with the day trades that I like to do on this channel, I look for stocks that are gapping up. I wait for them to make a high of the first 15 minutes, and once they break through it, you usually get some follow through to the upside, and I can usually capitalize on that for about, 3, 4, 5% or so. But that did not happen with DWAC. I mean, I put in my order at $52.36 once it broke above this area, so I got in right here. But unfortunately, it rolled over and stopped me out. I got executed at $52.40, and it rolled over and stopped me out at $50.11. So, and I actually had my stop loss in at $50.49, and I got filled at $50.11. So I lost almost another % on that fill. So they really skinned me alive on this one. But oh well, it happens. Most of these trades end up working out, but it was one of those days where we just had big swings, and if we could have had just a little bit more room to the upside, I could have got out, and I actually had my order in to take profit at $54.14, and it made it to as high as $53.97. So if it would have went up just a little bit more, this would have been a profitable trade for me, but unfortunately, that's how it works out. Sometimes you call them perfectly, sometimes you don't. And this one just happened to go just a little bit below where my profit target was. But oh well, I will get the next one. But those were the trades that I made today. Okay, everyone, that is all I have for this video, so I'm going to end it right there. But if you have any questions or comments on any of these stocks, or if you have any other ones you want me to take a look at, please leave it down there in the comments section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.